go tell your comrades this is going to happen. The heavy hand of the regulator is going to be coming down to squeeze heads starting very soon.
In today's video, Canadian businessman and entrepreneur Shark Tank star, known as Mr. Wonderful Kevin O'Leary, updates about the market and where we are headed next in the crypto space.
So the first thing I want to talk about is, of course, this banking crisis.
Right.
We thought it was over. We saw that the banks were essentially de facto bailed out, Silicon Valley Bank, Signature, and the others. What's your take on a renewed banking crisis coming? And do you think all deposits should have been 100% backstopped in March?
So let's just keep the emotion out of it, because it's actually quite an emotional issue. This whole idea of regional banks supporting regional economies. Most of these franchises were set up more than 60, sometimes 100 years ago. By the numbers, there's about 54 regional bank brands. They have between 100 and 1,000 branches each. So you end up with around 4,500 branches. We're learning that not every branch is well managed, and that there's what I call the idiot factor. We don't know what percentage of them, but let's just use a number like 15% are run by idiots. And I don't mean that in a derogatory way. I mean, they've never experienced rate hikes this fast. When you think about the talent you required to run a bank, you only need to do two things right, okay? You need to understand duration and quality. So when you loan out money, how long did you loan it for, and what is the quality of the recipient's ability to pay it back? Or when you take depositors' money and you invest it in treasuries, how long, what duration are you putting it out at, knowing with certainty that's illiquid until it comes to maturity? In the case that rates go up, you have to sell it at a loss. Now, if you don't understand that in the context of being a banker, you're an idiot. That's my definition of idiot banker. So in the case of Silicon Valley Bank, run by idiots. The board, no oversight at all, it seems. And even the Fed seems to be culpable here because they didn't see it coming. So I think there's going to be a lot of soul searching within the system. But having said all that, let's ask ourselves a more important question. When you set up these banks decades and decades ago, it was done for a singular reason, because the banking system and the government at that time realized that there were regional differences in the economies. Texas's economy, very energy-based at the time, versus California, agrarian growing of all kinds of products and services. And then Florida was different than Illinois, was different than New York. So the regional bank stepped in to provide more local color and a touch point, particularly around the asset class of commercial real estate. Now, there was no internet banking. You rode your horse to the branch. That's what you did. That's when they were set up, and you had a bag of money and you brought it back to the ranch and all that stuff. Decades go by, and of course, we don't need regional banks in the same way anymore, because we have online banking. We have electronic banking. We have digital banking. You can make a loan or apply for a mortgage from an online entity that you'll never meet anybody.
Yeah,
and indeed, that's what people do. And so all of a sudden, you start to wonder, why do we need all this infrastructure when really other countries have already proven? England, for example, has 300 banks in total running the economy. Canada, 6. Handful of banks in Australia.
Wow.
2 banks, now 1 big one in Switzerland, with some smaller regionals in Zurich and Geneva. But they don't fail because they're well-managed banks. And there's some examples in the United States, like the state of North Dakota, that has its own banking charter that oversees the regional banks in North Dakota, and they don't fail. It's the idiot banks that cause the problem. So now you're wondering about, what's going on with First Republic. It's going to go to zero because it's run by idiots, and that's okay. It doesn't matter if it goes to zero, as long as we don't guarantee every deposit past the 250,000.
Which we did for Silicon Valley
Well,
Bank.
we shouldn't do that again, because you're making someone in Florida pay for the mistakes of an idiot in California, and they're not going to put up with that. They don't have that interest. And so there's going to be a backlash, a pushback from people saying, wait a second, I don't want to guarantee the folly of idiot bankers. And so we have rules in place. The FDIC insurance, which is only just over $200 billion now, And when First Republic goes down, it'll probably eat up 40 billion of that.
Wow.
So you have to cull the idiots from the herd. And it's okay that all the shareholders at First Republic lose all their money, all the bondholders lose all their money, and I'll tell you why it's okay. The market will self-correct. They'll say, oh, where's my money?
Yeah.
Is it with an idiot banker? Maybe I should move my money away from an idiot banker to a less idiot banker. And the industry will consolidate to less idiot bankers in super regionals.
Should they have all taken a 10% haircut?
Well, no, I think they should have taken the full haircut past 250,000.
Oh, wow.
Those are the rules.
Wow.
Why do we change it? Because believe me, the economy would have survived, Roku would have survived, Circle would have survived, but it would have changed their behavior going forward. The market always does a very good job when it has these corrections, and I'll give you an example. Lehman Brothers, did it wipe out the American economy? No. Bear Stearns, just a blip. Enron, who cares? It didn't change the energy market.
That's a good point.
The idiots always get culled. And that's a good thing. But when all of a sudden I'm being asked to take care of everybody's problems all the time, and there's no culpability with the idiot manager, I'm not okay with that.
On crypto, Mr. Chamath Alipapatia, SPAC King, says that crypto is dead on his latest podcast because of the lack of clear regulation in the United States and the lack of a path towards regulation. This is just my opinion. Congress should probably pass a rule, but they won't. Gensler at the SEC and the Commodities and Future Trading Commission, they can't do anything, so they are trying to get the judicial system to basically create case law, but that's going to take years, and that's leading some people like Chamath to say crypto's dead. What say you?
Well, he's not entirely wrong. It's dead to institutional investors.
Oh, wow.
So I index. You know, we do indexes. I speak to sovereign wealth and pension a lot, and they will not touch crypto until there's regulations. So for all the excitement, Bitcoin is locked in purgatory to set a trade 17 to 35,000 for a long, long time, because it's basically the same people trading it back and forth. And there's no new money coming into it. It's not an institutional product where they get a 5% allocation. There's nowhere to hold it. If you're an institution, I thought one of the biggest mistakes of recent was Coinbase litigating the SEC. That sounds like a really bad idea. That does not advance the industry in any way. It makes institutional shareholders cringe that they would be shareholders in Coinbase and be litigating their regulator. Very bad political move. And if I were a shareholder of Coinbase, and I'm not, I would let my displeasure known to the board. This is the kind of thing you want to change management for.
Wow.
You want teams to go in and work it out and figure out under what way can we operate under the regulator so that we can attract institutional capital for the day when, you know, maybe a series of 50 tokens and coins are regulated, as they are in Canada, as they are in Dubai and Abu Dhabi and Singapore and Zurich. Those regulators say, well, these are the ones you're allowed to trade. These are the ones you're allowed to stake. We don't have any of that here. And so the only narrative continuing on the Hill that I'm supportive of and I'm aware of, all the bills around Bitcoin and NFTs are all stalled out, but not on digital payment systems. That's a bipartisan bill. Senator Lummis, I know Haggerty's people are looking at it. There's others supporting it so that we can get stable coins to do transactions to replace the SWIFT system, the ACH system. Those are really archaic. And they're expensive and they're slow and they're not transparent. So, you know, a stable coin like USDC, if it was regulated, would be more useful. Hopefully in the next couple of years we can get that, but I don't know that either. So,
do you think there's a risk, this is always the fear that comes up, that, well, if we move to a digital dollar, let's say, a CBDC, the government's going to control our money and take it all away from us, or watch every dime we spend. Is that an unfounded fear?
They already control all the money. They already audit you. It's called the IRS. They already track what you do. The know your client is how they know you're not a criminal and allow you to transfer capital between states and countries. I don't know where this paranoia came from, but, you know, yes, a digital dollar is bad if you're a criminal. It's just bad. It doesn't help you do your business. And it's hard to transfer it without, you know, being tracked.
Right.
but it's backed by the currency that the world denominates commodities by, versus would you ever use a digital yuan where the government would know exactly where you are? Now, we have privacy laws here and we can litigate them.
Yeah.
This does not concern me as much as actually getting the regulation. And there's always going to be, the way I always answer this question is, you think about free speech, how controversial it is, and yet how dear it is to every voter in America, regardless of what side of the fence you're on. But in order to tolerate it, you also have to tolerate the 2.5% lunatic fringe that has a voice that's utterly insane all the time. And so you're going to have that lunatic fringe in crypto. You're going to have the purists who say, I don't want the government involved. That voice is getting quieter and smaller. And there's one other aspect I'd like you to consider that I've been thinking about lately. When I look at the environment today, with all the litigation and all the regulation and all of the lawsuits coming into crypto, my guess is most of these operators out there today that were the founders of this nascent industry have never operated in a compliant environment or borne the cost of compliance.
Sure.
And they will be pushed aside, and a new generation of founders will emerge that will work with regulators.
Yes.
So all of these rogue operators, the people that are stealing your money and all of this crap. And the reason I say this is when I went to the Senate hearings for the FTX hearings, I learned something the next day that I never even thought of. I was talking to the senators, and I won't mention their names, but it was a group of them said to me, look, here's a message for you. We're tired of this. We've reached the point of tedium was the word. We're tired of gathering every 6 months when the next idiot blows up and loses $6 billion.
Yeah.
So here's what's going to happen. Go tell your comrades this is going to happen. The heavy hand of the regulator is going to be coming down to squeeze heads starting very soon. And you won't find any sympathy here on the Hill anymore.
Which happened.
It happened faster than I thought. I marched home and told everybody in my shop, whoa, those guys are pissed. And they don't have any sympathy anymore. And the next thing you know, Binance gets whacked with a class action, and then regulation slamming FTX US, and they're chasing them all over the world. And, they're looking at that BNB token. That's the next thing to blow up. And so,
oh, really? You think that'll blow up?
I can't see how that survives.
Binance, you don't trust CZ?
No, it's not about trust. It's about this. Think about what happened in the last 12 months. I mean, just follow the dots.
Okay.
I mean, I think CZ is a brilliant guy. He's a great entrepreneur. What he's built is remarkable. I just think he's the largest unregulated central exchange in the world, and that's hard to become. Now, he has two choices. He's on the path and the road. Come to Washington, settle his grievances with all these charges that he's faced with. Let's just put a price tag on it. $8 billion.
Yeah. Okay.
And then get a license and be the giant behemoth licensed exchange, broker-dealer attached to an exchange with a license in the world. If it were me, I would take that path.
Yeah.
But that's not a very profitable path because the cost of compliance is very high because you don't get to put, think about these tokens. FTT did the same thing, FTX. You're an exchange. You say, oh, I'm unregulated. I just launched a token. It's called BNB. I say it's worth $64 billion. And the reason you're going to buy it from me is I'm going to give you trading discounts if you hold at least 20,000 in your account. That is so illegal in a regulated environment. You couldn't do that in a bank anywhere, not just the United States. And it's very profitable because two wallets own over 90% of 64 billion. Who owns them? Who owns them? Unknown. What happens if one of them wants to sell them? Does Binance have $30 billion in cash? No. And so who backs it? Unknown. These are the questions that regulators want answers to. And that means CZ has to come to America, disclose ownership, disclose who backs it, disclose everything, know your client. and all of a sudden lose 80, 90% of his profitability. Or he can just work in the shadows, as he's doing now, and just say to the U.S., okay, I'm closing my operations down in the U.S. The only problem with that is a few months later, the regulator in Switzerland says, well, if the U.S. is doing that, maybe we're going to do that too. And then Dubai and Abu Dhabi go, ooh, CZ.
That's where he is now, in Dubai.
Yeah,
right.
and they say, CZ, love you, baby, but, this thing with the SEC, the U.S. regulators, we do a lot of business in the United States. In fact, most of our money's over there. Could you move to
Geneva or whatever.
Cuba?
Interesting.
Or somewhere,
okay.
just get out of here. And I think that's his destiny. This is my own speculation. But it's going to be one jurisdiction after another that says, rather work with the U.S. than support this rogue operator.
Interesting.
And I think that's the downside that's the end of the Binance story. Now look, I'm speculating, but would I have any money in Binance? Never.
Wow.
Never, because only in the last 6 months, look at the onslaught of litigation they face.
Right.
And I've met with all those regulators in Abu Dhabi, in Dubai. They're not stupid.